we have the All Share Index roughly 70% below its high of 66,371. We had the NSE 30 index around 50% of its peak as well, where both hit which were both hit in March 2008. So where one would think there's a lot of room to run on these markets and positive news around to affect that kind of flow, why the kind of pulling back that we're seeing from the market right now?
Thank you, Alishia. Well, I think what is happening in Nigeria is part of the overall pullback of funds from emerging markets. Like you said earlier in the program, 7 billion left markets, emerging markets in February this year. And, there's been a bit of asset reallocation from emerging markets to more developed markets in the US. So I think that Nigerian markets haven't done 10% in the month of January. Investors are taking profit and sort of trying to rebalance their portfolio. For most of the African funds, with Egypt having lost 20% and the market closed, you find that Nigeria proportionately in their portfolios will begin to be a bit overweight. So they will have to sell down to reduce their allocation to Nigeria. And lastly, investors are just sitting on the sideline now because they don't know who is going to be next. It started in Cote d'Ivoire, Tunisia, and now Egypt. Nigeria is going through an election year in April, and I think investors haven't made 10%, have decided to take those profits and wait in the sidelines until they get more clarity on the outcomes of the election.
With that,
so
we've seen a kind of a short-term trend emerge, Dave, of attention being diverted to the fixed income space as investors opt for more secured investment interests. Are you a part of that trend? To what extent have you been reconsidering your investment plans?
Well, following the rate hike, by the CBN, obviously the bond market is beginning to look more attractive or very attractive relative to the equity market. Rate hikes generally are bad for equities and good for bonds, particularly short-term bonds. But more importantly, I think that what CBN is trying to do is to establish a strong credential as an inflation fighting credential. So while what we're doing, we're watching the market. There are a lot of rich pickings in the equities market. We are slightly overweight in the bond market, particularly on the long-term bond market, the 20-year papers, and where yields have now dropped from 14.5% to about 13.5%. So we are not necessarily, moving our portfolios from the equities market because, as pension funds, we are long-term investors, and we believe that the market is still cheap. The market is trading at a trailing PE of 12, and if you look at the banking stocks and the other sectors in the market, I believe there is still a significant upside, this year.
Let's take a look at some of the stocks that could warrant taking a look at. We saw the recent profit announcement of Flourmills reporting weaker than expected third quarter 2011 numbers, that for the end of December period, sales declining about 7%. What's your view there? Because we saw PAT also falling by a much greater margin of 38% than the market had been anticipating. Safe to assume disappointing markets to quite a big extent?
Yes, I think the story with Flourmills is rising with prices globally. Flourmills controls 46% of the flour milling market in Nigeria. But you have to understand that Flourmills is not just a flour miller. Flourmills is a diversified company. It has, is active in flour milling, in cement, in fertilizer, packaging, ports operation, and now is entering the sugar space. So I think that perhaps investors will have to take a look at Flourmills again because on valuations, Flourmills is just valued based on the flour milling operation. If you look at the overall impact of the wheat price, I think Flourmills will weather the storm. Flourmills trades at a historical P of 8.79. Even if earnings drop by 10% or 20%, that is still a cheap stock. Is a good play on the rising middle class in Nigeria. So we are not necessarily selling our flour mill shares. However, we'll wait and see if the market drops further. So perhaps we can buy more. I think that the rising wheat price will affect other players like Dangote Flour and Honeywell Flour more negatively than Flourmills. Flourmills has been in this business. And I believe that they will have a hedging program to manage the downside risk of rising wheat prices.
Well, we've got obviously its diversification strategy, as you've highlighted, holding it in good stead. You touched on Honeywell Flours. Let's take a look at that player, because it holds currently about 8% of market share, but has been making quite loud noises about bulking up. What's your view on its position moving forward and its capacity to actually bulk up to the extent that it needs to be a strong enough competitor against the likes of a player like Flourmills?
Well, we don't hold Honeywell flour at the moment, but just looking at that flour milling space, the big players are Flourmills and Dangote. I don't think that Honeywell has the financial resources to compete against these two players. I believe that the market will continue to consolidate around Flourmills and Dangote flour. Both players account for 80% of the market, and you remember that Flourmills also controlled some other flour milling operations in the north. So I don't believe, I'm not buying into that Honeywell flour growth story at the moment.
Let's take a look at the cements sector. Of course, this is a sector, as you highlighted, that Flourmills is heavily involved in. What are you making of industry dynamics here? Because we do know that there's a need for Nigeria to build up. Your position on the cement players at this stage?
Well, I mean, the cement players, you have one outsized player, Dangote Cement, which controls 70% of the market, and you have the Lafarge operations and WAPCO and Ashaka. I mean, I think between the two of them, they pretty much tied up the market. The Flourmills cement operations, by way of market size, is not significant. It's less than 10% of the market. It's about between 2 and 5% of the market. However, for Flourmills, is value accreting, because just by the recent cement tariff, the cement players will do well relatively. While for cement and cement sector, it all boils down to valuation. Whilst Dangote Cement is a good company, there are still issues about the valuation of the stock. We're waiting for the earnings to come in, because the stock was priced at the forward 2011 and forward 2012 earnings. So we need to see the earnings, in 2010 to take a complete view on that stock. We like WAPCO at the moment. We think it's cheap. We think that it has upside potentials. We are fairly neutral on Dangote Cement. We are not overweight on Dangote Cement. But I think that going forward, like you rightly said, the cement companies will do well. There's massive infrastructure deficit, and we have 3 players that have closed down the market. So you can't go wrong with those cement players. However, you need to have a time, outlook of more than 12 months, maybe 12 to 24 months.
You mentioned that we've also got Flourmills looking at entering the sugar space. Of course, this in a context where we're looking at duopolistic market structure currently in Nigeria and supportive policies for Dangote sugar specifically. How do you see Flourmills contending within that sugar space?
Well, I think that you can have a market where there's only one player. Flourmills is trying to take advantage of the potential growth in that space. What they are doing is a sugar refining plant, but they're also going to some sort of backward integration and go into a plantation. I think that obviously Honeywell is not, Flourmills is not looking to take on Dangote sugar. What Flourmills is just doing is to diversify its earning stream, and just like it's done in the cement space, it will not be I don't think it will be a controlling player in that market. However, the additional earnings from that space will sort of further diversify its income stream from the dominant flour milling operation, and create value for investors in future. So we'll watch that space. Like I said, we are fairly bullish on Flourmills. We think it's very cheap, and I think that going forward is a stock to watch.